Hi, this is Dave Ford, President and Founder of the Atlantic Gold and Silver Center. Today is Friday the 6th of October 2017. Today we're going to look at quite a contentious topic. Should you swap your precious metals for cryptocurrencies? Now, when we started trading cryptocurrencies a few months back, we found it appealed to a different sector than our normal investors in gold and silver. Some people bought both, but most people were either in one camp or the other. They would either be buying precious metals or cryptocurrencies. However, the last few weeks we've seen people swapping their precious metals for cryptocurrencies, and not just small amounts either. We recently had a transaction. Somebody did 800 ounces of silver and swapped it for Litecoin. We had somebody swap 20 ounces of gold for Bitcoin. So what is the incentive to do that? Why would somebody go and trade a physical, tangible asset like this for a virtual asset like this? Well, before we answer that question, have a look at this chart. This chart shows the money supply in Canada. Now, only 4% of the money actually exists in physical form. This is the M0 measure, or narrow money. By physical form, we mean notes and coins you can actually hold in your hand. It's actually slightly less than 4% because the 4% includes small bank deposits you can immediately convert into cash. The rest of the money supply, making up the M3 number of all money, is all virtual or digital. It exists only in banking computers. Over 96% of the money in Canada does not physically exist. It's digital. Sounds like Bitcoin to me. So next time someone says to you that cryptos are all just virtual and don't really exist, you should probably point out to them that 96% of Canadian dollars are also virtual and don't really exist. But most people don't really complain about having them in their bank account, even though there's nothing tangible there apart from ones and zeros or something displayed on a screen, just the same as for cryptocurrencies. So the argument about whether an asset is virtual or physical is actually quite irrelevant, and accountants have long recognized this. So a good example is, in some businesses, their name is worth a lot of money, and it can actually be bought and sold for real dollars. But it's entirely intangible, and yet names and brands and trademarks can be worth huge amounts of money. So why do people trade precious metals for cryptocurrencies? Well, ask yourself this question. Which is most likely to double in the next few years? Silver or Litecoin? Not sure? Have a look at this chart. The chart on the top shows the price of silver for the last 5 years. We've been in a bear market for the first half, and now we're just in a flat sideways market. The chart underneath shows the price of Bitcoin for the last 5 years, starting at way under $10 to now over $5,000 in US terms. We're in an incredibly strong bull market. So if you had to answer the question which is most likely to double in the next 5 years or next few years, you'd have to say it's the cryptocurrencies. Now, we're all familiar with price suppression in the precious metals markets, but it's not happening in the cryptocurrency markets. Supply and demand are determining the prices the way they should do in a truly free market. Inelastic supply means that prices can be volatile, but usually to the upside. Inelastic supply simply means that there is not a huge supply, and a sudden demand shock can produce prices that move up very, very quickly. And cryptocurrencies work as a currency. Sure, you still need some bit of techie know-how to do it, but they're getting easier to use all the time. So would I trade all my gold and silver for cryptos? No. Gold and silver are assets that have stood the test of time, and they are still subject to great price suppression, which means that when that finally takes off, they will go up very, very quickly. We'll see outsized gains, and we'll have a tangible asset in our hands too that's much more resilient than anything that's virtual. But while we wait, moving a small percentage of our funds into cryptocurrencies might not be a bad idea, and that way it gives us a chance to get a bit of steak on our plate while we wait for our pie in the sky. Thanks very much, and see you again in a couple of weeks.